Welcome to this series of short videos providing unique insights into the sulphur and sulfuric acid markets with a particular focus on Asia. I'm Oliver Hatfield, VP of Fertilisers, based in Argus's London office. This series of sulphur and sulfuric acid market insights will be presented by our editorial team based in both Europe and Asia. Speakers include Maria, editor of Argus Sulphur, Lily, editor of Argus Sulfuric Acid, Shi Fong, our fertilizer team manager in Asia, and Dion, senior reporter for sulphur and sulfuric acid in Asia. Our sulphur and sulfuric acid market intelligence services are also supported by colleagues in our consulting and analytics team. Before we get started, a quick note that this video uses data and analysis sourced from Argus's sulphur and sulfuric acid price reporting services. We also support the industry with short and mid to long term outlook and analytics services, as well as bespoke consulting support. If you're interested in finding out more on these services and our coverage of these markets, please use the email addresses that you can see on screen or the links provided on this video page. For this series of videos, we'll be covering sulphur as a critical raw material, Indonesia's role in the global sulphur and sulfuric acid markets, a spotlight on China looking at sulphur, sulfuric acid, phosphates, and nickel, and sulfuric acid market changes in Asia, considering key market drivers, supply and demand. I'll now pass you on to Maria, who'll cover sulphur as a critical raw material.
I'm Maria Mosquera, the global editor of Argus Sulphur, and I'd like to take a look at sulphur as a critical raw material with a couple of slides to show some key industries that sulphur is used in and also some of the key price drivers of sulphur in recent times. The sulphur market has gone into 2025 on a firm footing with prices on a steady upward trajectory from mid-2024 onwards and quite accelerated in February, March 2025. Mainly driven by Moroccan sulphur burners starting at the end of 2024 and the ramp-up phase going ahead and needing sulphur as a raw material for the phosphate fertilizer industry from Morocco. And then that was followed by expansions at Indonesian nickel projects, and then there in kind of May 2024, and also in that acceleration later on in 2025 as well, we saw the nickel producers from Indonesia really driving price increases for some of the expansions that came in and required more raw material. And then also we saw some reductions from the Middle East, from some maintenance rounds, as well as some reorganization of contract supply into the spot market, and in many cases concluded directly rather than via traders from the suppliers there, and that kind of had a little bit of an impact as well on drawing some of the consumers to market to ensure their raw material stocks. And also EU sanctions on Russia were tightened as well, and geopolitical risks and heightened risk of tariffs with the new US administration threatening new tariffs on many countries, and then counter tariffs also becoming a threat there. And that's also had a bit of a disruptive impact, despite the fact that no direct tariff impact has been felt in the sulphur space to date, but it has had a knock-on impact also on the sulphur market. and some of the uncertainty on GDP growth and also tariff likely impacts on the market. And those have had an upward impact on pricing in many cases. Now, as you can see on the top chart, on the right-hand side, the global TP market and global phosphate fertilizer market is supportive factor for sulfur pricing. Coming into June, the markets are still quite firm and both in a similar trend line. And that's definitely something that is supportive and still the major driver for the sulfur price trend as well. However, we've been talking about the metals markets and nickel industry consumers having been less price sensitive to sulfur market price fluctuations in the last couple of years, and that has meant that in Indonesia, where the industry has grown very quickly over the last couple of years, at points in time we've seen that those buyers have been driving prices up and have been less price sensitive than the fertilizer buyers, and particularly when it's been an off season or there's been low demand from the fertilizer space, we've seen the nickel buyers and the nickel market supporting sulfur prices. However, government moves toward export restrictions of raw material nickel and to feed the refining nickel refining industry, and also there's been discussions in Indonesia about royalty payments, which may restrict operations at the Indonesian nickel refineries and also limit demand for sulfur and also impact on their economics, meaning that they may become a bit more price sensitive as well. And we're seeing also major consumers having built stocks in China, Indonesia, and Morocco in over the first half of the year and coming to the end of the second quarter, with Chinese stock levels reaching again 2 million tons, where they've been quite consistently below those that sort of level. And also Indonesia, there's also a move toward some of those larger consumers starting to build a bit more in stock and be a little bit less dependent on the spot market price fluctuations and a little bit less exposed to those. Morocco also has been building inventory for the ramp up that happened with the two new sulfur burners coming in last year, and now running at high rates to for the fertilizer seasonal demand, and to make sure that production is at high rates. So those are also impactful. And there on the bottom chart, you can see the sulfur inventory that has now been climbing, and by late May reached again the 2 million tons there. As we've talked about expansions, demand overall has been supportive of prices in the sulfur market this year, but seasonal softening and sentiment-driven volatility is expected to limit price rises, as well as the fact that in these charts you can see that prices have been moving up and have kind of begun to stabilize through latter the second quarter. And some shipments have also been booked and are being delivered during the second quarter from west of Suez suppliers to the east of Suez, balancing out the market where there's been a little bit more demand in the east. And you can see that the Brazil CFR hasn't quite lifted in the same way as some of these consumers in CFR China, Indonesia, and India. Haven't quite paid the same prices, as the balance in the West has been a little bit easier and a bit more supply versus demand, and also the Russian and FSU supply, despite sanctions, continuing to move to the Brazilian market as well at a lower cost. And still overall, a balanced to tight market is something that we'll expect to keep prices from dropping steeply this year, before where there are more consumption side rises rather than any huge increases to supply and to new production in the market. particularly in the second half as we lose some of those crushed lump sulfur volumes at the end of the summer from the Kashagan project as that becomes depleted, and typically Middle East as well, crushed lump product availability being lower in the summer months due to the hot weather, making crushing a little bit more difficult. We expect market to be quite well supported and no price crashes expected, as has happened before when there's been this sort of a run up in prices. But this year, any correction is said to be very minor. Geopolitical risks, sanctions, and tariffs are something that we will continue to look at as presenting an unknown factor with many flashpoints with the sanctions and on Russia and Ukraine and Iranian and the Middle East shipments via the Red Sea, potential points where these any changes could impact trading, and also the tariffs from the US administration, any potential counter tariffs, and the potential for these to change trade flows and maybe also impact trade routes. We expect to see some slower economic growth as a result of greater protectionism and a little bit less in international trading overall across products, and some inefficient trade routes, and maybe some freight cost changes as well that could be a little bit unpredictable as well moving forward, and with a knock on the impact on the sulfur market, though tariffs from the US haven't really had a direct impact to date in any significant way on sulfur. Just a very brief look at some of the key global markets where there are some aspects that are shaping the market. And starting off with the China situation, sulfur import demand is supported by the expected fertilizer exports that we will expect to see coming out to the global market moving forward. And we expect these to be curbed a little bit from last year's, but with a steady regular flow to the global market. In Indonesia, sulfur demand continues to rise, driven by the rapid growth from the nickel industry mainly, with imports already rising to 3 million tons in 2024 and more expansion still coming this year and in the coming years as well. The risk factor here is for sulfur demand is government policies around export quotas, which could support nickel prices, but also slow demand and growth there, and discussion around royalty payments as well, and some question marks over financing moving forward. On the supply side, Middle East consolidation with less trader business is something that we have seen from the beginning of this year, which may add to some price volatility this year. This is a growing supply source that many consumers will be looking at moving forward as many other regions grow in consumption and see losses in the supply side, with the Middle East still set to add production in the coming years. In Kazakhstan, sulfur exports are boosted by the crushed lump quantities exported from Kashagan's block, and these are due to run out by the end of this summer. And the product is mainly moved to North Africa with EU sanctions. If we did see some tightening to EU sanctions on Russia, a risk for both Russian and Kazakh supply chains moving forward, though US sanctions at the moment directionally remain unclear, and these exports continue to flow with Kazakh product to more markets and Russian a little bit more limited in terms of which markets are willing to accept it due to the higher risks and moving on a discounted basis. In Morocco, sulfur demand is also rising. Over last year, we saw 2 new sulfur burners added, and Morocco very much adding new capacity continuously. And imports exceeded 8 million tons in 2024, and seasonal demand is keeping production of fertilizers high in the second quarter. In Canada, sulfur exports are being supplemented by deep blocking with new forming capacity, enabling blocked sulfur to be remelted and brought out to markets despite dwindling new production. And prices at current levels are supportive of remelting and bringing product off the blocks, despite the high inland logistics and processing costs associated to this form of product. Relatively set supply chains with more product gradually to move via Vancouver. So tariffs did not materialize to the US market for Canadian volumes, and we expect this close to 1 million tons of liquid sulfur to continue moving to the US market via rail. But also, we expect to see a slower trend over the coming years with some additional solid product brought out via Vancouver port to find new markets and to become a little bit less reliant on just one export market. In the US, sulfur market production has been dropping due to sweeter shale oil and gas feedstocks, as well as a wave of refinery closures, with yet another refinery closing in the US Gulf this year, and also early this year, and also further ones in California expected over this by the end of the year and next year. Tariff impact could lift domestic prices if tariffs did come in further down the line, but most sulfur coming to the US market coming from Canada and currently under the North American Free Trade Agreement and not subject to tariffs. But this could still change and have an impact on the US market. But there we expect in the years to come more demand and more import demand from new consumers coming in with more dependency on imports from Canada. That concludes my section. Thank you very much for your attention, and I will now hand you over to Dion for a more detailed look at the Indonesian market.